The dream of finding the next big cryptocurrency before it explodes is what draws many people into this space. Imagine getting into Ethereum or Solana when they were just starting out. The potential for life-changing returns is very real. Crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. Early investment, if done correctly, can offer exponential growth that's hard to find in traditional markets. Projects that start small can grow into multi-billion-dollar ecosystems, rewarding those who believed in them from the beginning. However, the crypto market is also filled with hype, speculation, and outright scams. Without a clear plan, trying to find early gems can feel like navigating a minefield. Many projects fail, and losing your investment is a significant risk. A well-defined strategy is absolutely crucial to cut through the noise. You need a systematic way to evaluate projects, understand their potential, and identify the warning signs. Relying on hype or anonymous tips is a recipe for disaster. This guide is designed to provide you with a blueprint. It's a framework for conducting your own research and analysis. We'll cover what to look for, where to look, and what to avoid. Think of this as your starting point for developing a disciplined approach to early-stage crypto investing. It's about empowering you to make informed decisions based on fundamentals, not just speculation. So, what exactly separates a truly promising project from the thousands of others? It starts with utility. A project needs to solve a real-world problem or provide a valuable service that people actually need or want. Does it make a process more efficient? Does it create a new market? Does it offer a better user experience? Projects with clear, compelling use cases have a reason to exist and grow. Execution is just as important as the idea. A strong and active development team is key. Look for experienced individuals with relevant backgrounds who are consistently building and delivering on their promises. A team that communicates openly and shows tangible progress on their roadmap instills confidence. They are the engine driving the project forward. Sound tokenomics are absolutely essential for long-term sustainability. This refers to how the project's native token is designed, distributed, and used within the ecosystem. Consider the total supply, the distribution schedule, and how the token captures value or incentivizes participation. Fair distribution and clear utility for the token itself are vital signs of a healthy model. A thriving community drives network effects and adoption. A project isn't just code, it's people. Look for engaged users, developers, and enthusiasts who are actively participating and contributing. A strong community provides valuable feedback, helps spread the word, and builds resilience. It's a powerful indicator of organic interest and potential growth. Finally, aligning with current market narratives can help a project gain traction. While fundamentals are key, understanding the prevailing trends in the crypto space can highlight areas ripe for innovation and adoption. Is the market focused on DeFi, NFTs, gaming, or perhaps a specific Layer 2 solution? Projects that fit into these narratives can sometimes find it easier to gain visibility and attract users. Just as important as knowing what to look for is knowing what to avoid. Red flags can signal that a project is high risk, potentially a scam, or simply unlikely to succeed. Anonymous teams with no track record raise significant suspicion. While some legitimate projects start this way, it makes accountability difficult. If you don't know who is building the project, it's hard to trust their intentions or capabilities. Lack of transparency about the team is a major warning sign. Reputable projects usually have public team members with verifiable professional histories. Vague or buzzword-filled white papers lack clarity and substance. A white paper should clearly explain the problem, the proposed solution, the technology, and the tokenomics. If it's full of jargon without explaining how things actually work, be wary. A good white paper is detailed and technical, but also understandable to its target audience. It should demonstrate a deep understanding of the problem space and a viable plan for execution. Unfair token distribution, such as a very large allocation reserved for the team or early insiders with short lockup periods, is risky. This can lead to large sell-offs that crash the price. Look for a distribution model that prioritizes community growth, development, and long-term incentives. Transparency about token vesting schedules is also crucial. Lack of a working product or significant roadmap progress indicates poor execution. Many projects launch with big promises but fail to deliver tangible results. If the project has been around for a while but has nothing to show for it, that's a bad sign. A project should be consistently hitting milestones and demonstrating development activity. Check their GitHub, testnet, or mainnet progress. Hype-focused marketing without genuine community depth is superficial. Projects that rely solely on aggressive marketing, paid influencers, and promises of quick riches often lack substance. True community grows organically around the project's value. Be skeptical of projects that seem to be all marketing and no development. A strong community is built on shared belief in the project's vision and utility, not just price speculation. Sketchy websites or unverified smart contracts are dangerous. A professional, well-maintained website is a basic requirement. More importantly, smart contracts should be audited by reputable third parties. Investing in a project with unaudited or poorly written smart contracts exposes you to significant technical risks, including bugs that could lead to loss of funds or exploits. Always verify audits. Finding promising projects before they hit the mainstream requires looking beyond the top 100. This is where the real opportunity for early investment lies. Explore new listings on platforms like CoinGecko or CoinMarketCap. These sites list thousands of cryptocurrencies, including many that are very new or have small market caps. Filter by recent additions to see what's just coming onto the radar. These platforms provide basic information, links to the project's website, white paper, and social channels, giving you a starting point for your research. Focus on projects with low market caps, generally under $50 million, and strong fundamentals. Low market cap means there's significant room for growth if the project succeeds. However, the low market cap alone isn't enough, the fundamentals must be solid. This is where your research skills come into play. You need to evaluate the underlying technology, team, and tokenomics, not just the current price or market cap. Dive into ecosystem builders within established blockchains. Instead of looking for the next Ethereum killer, look for projects building useful applications or infrastructure on existing, successful chains like Solana, Polygon, Avalanche, or Cosmos. These projects benefit from the parent chain's security, user base, and developer tools. They can grow rapidly by serving a specific need within a larger, thriving ecosystem. Utilize crypto research hubs like Masari or DeFi Llama for data and insights. These platforms aggregate vast amounts of data on projects, protocols, and market trends. They can help you find projects based on specific criteria or explore different sectors of the crypto market. DeFi Llama, for example, is excellent for tracking total value locked, TVL, in decentralized finance protocols, which can indicate user adoption and activity. Monitor narrative-specific discussions on platforms like Twitter and Reddit. Follow reputable analysts, developers, and community leaders in specific niches you're interested in. Engage in relevant subreddits or Discord servers. Be cautious of shilling and hype, but these platforms can provide early signals about emerging trends and projects that are generating genuine interest among informed participants. Once you've identified a potential project, it's time for deep analysis. This is your do-your-own research phase, and it's critical. Assess the project's use case and problem-solving ability. Does it address a real, significant need? Is its proposed solution innovative and feasible? Understand exactly what the project does and why it matters. Evaluate the size of the market it's targeting and whether its solution is genuinely better than existing alternatives, both within crypto and in traditional systems. Evaluate the team's background and activity. Look up the core team members on LinkedIn and other platforms. Do they have relevant experience in technology, finance, or the specific industry the project targets? Check their activity on social media and development platforms like GitHub. Are they actively building, communicating, and engaging with the community. A public, experienced, and active team is a major plus. Analyze the token model and distribution. Understand the total supply, circulating supply, and how tokens are being distributed. Is there a large portion held by insiders or the team with short lockups? How is the token used within the ecosystem? Does it have utility beyond speculation? Does it capture value as the network grows? A well-designed token model is crucial for long-term price appreciation tied to network activity. Determine the current stage of development. Does the project have a working product, even if it's just a testnet or a beta version? Or is it still just an idea on paper? Projects with a demonstrable product, even an early one, are further along and have proven their ability to execute to some degree. Check their roadmap and see if they are hitting their stated milestones. Let's look at a couple of examples, one success story and one that didn't live up to the hype, to illustrate these points. Case Study 1, Solana, SOL. Solana is often cited as a project that delivered massive returns for early investors. It was identified early by many as a potential solution to Ethereum's scalability issues. Its core value proposition was high throughput and low transaction costs, addressing a clear problem in the blockchain space at the time. Solana had a strong team with experience from companies like Qualcomm and Dropbox. They had a clear roadmap focused on technical innovation and developer growth. This execution capability was a key factor. They actively built out their ecosystem, attracting developers and projects. While not without its technical challenges, Solana demonstrated consistent progress and attracted significant capital and talent. Case Study 2, Internet Computer, ICP. Internet Computer launched with immense hype and an ambitious narrative about rebuilding the Internet on a decentralized network. It promised to host apps entirely on-chain. However, the project suffered from overhyped narratives that were difficult for many to fully grasp. Its complexity and the grandiosity of its vision made it hard for the average person to understand its practical utility. ICP also suffered from poor tokenomics and weak community sentiment post-launch. The token distribution was criticized, and the initial price action was devastating for many early buyers who weren't insiders. Despite a technically capable team, the combination of complex technology, questionable tokenomics, and overwhelming hype that wasn't met by immediate, understandable utility led to a significant price collapse and loss of confidence. These case studies highlight the importance of looking beyond the hype, ICP, and focusing on clear problem solving, strong execution, and sound tokenomics, Solana. To summarize, here is a simple checklist for beginners to start their own research process. Ask these fundamental questions about any project you consider investing in early. Problem solved: does it address a real need or problem? Can you clearly articulate what the project does and why it's useful? If you can't understand its purpose, it's likely too complex or lacks a clear use case. Team: who is behind the project? Are the team members public? Do they have relevant experience and a track record? Are they actively engaged and transparent? A strong, reputable team increases the likelihood of successful execution. Tokenomics: is the token model sound and fair? What is the total supply and distribution? How is the token used within the ecosystem? Does it have utility beyond speculation? Avoid projects with unfair distributions or unclear token utility. This checklist is not exhaustive, but it covers the absolute core aspects you must investigate. Start here, and as you gain experience, you can add more layers to your research process. Finding the next big crypto requires diligence, patience, and a commitment to doing your own research.